What's up, guys? This is Manoj Shukrani. I welcome you all on behalf of the Edupedia world. So, guys, I'm sure you guys did had a great Diwali which was full of colors, lights, all the way, and certainly that was free from any kind of product from Chinese manufacturing entities or any kind of crackers. Both the things are definitely harmful, not just for India as well as for the entire environment. So yes, guys, perfect. So by now we have already covered one of the segment which was incorporated for capital markets. We have already covered one presentation for the same. By now we have already covered chapters relating to mutual funds, bond valuation, and the basic strategic financial management. So guys, this is the second video presentation relating to the topics of capital markets. Without having any kind of further delay, I'll just discuss my first topic of the day, and that would be major stock exchanges in India. So guys, this is the kind of like hot topics which is revolving around the economy of our nation, and that is how about the dealing and the online tradings which is being conducted in a nation like India. So there are many stock exchanges which are available in the market through which you can directly trade into the securities. There are approximately 23, exactly 23 stock exchanges in India. However, there are two major stock exchanges in India, and those are NSE and BSE. You guys must have heard about the same many a times. So we just briefly discuss about what these stock exchanges are really meant for. So National Stock Exchange was incorporated in the year 1992. It's a tax-paying company, unlike other stock exchanges. So this is the kind of catch over here. This was the first National Stock Exchange, or the first stock exchange which was incorporated as a tax-paying company rather than a normal stock exchange. It covers more than 350 cities across India. The name of the index is NSE Nifty, National Stock Exchange Nifty. Nifty basically holds the position for top 50 companies with the maximum market capitalization in the market. So Nifty is handling out the trading securities of 50 best market capitalization companies. Now comes Bombay Stock Exchange. So guys, Bombay Stock Exchange is one of the oldest stock exchanges, not just for India but the entire Asia. It was established in the year 1875. More than 6,000 stocks have been already listed on the Bombay Stock Exchange, and its index name is BSE Sensex. Sensex holds the position for the top 30 companies which are having the maximum number of market capitalization across Indian companies. Bombay Stock Exchange is the biggest stock exchange in the world. BSE, guys, is located in Dalal Street, Mumbai. So guys, what should be the purpose behind the major objectives relating to why these stock exchanges have been established in India? So their main objective is to establish the trading facility nationwide for all the types of securities. They ensure that equal access to all investors in the country through the process of appropriate telecommunication network. NSE basically helps enabling the achievement of these objectives within a very short span of time. It was NSE which has got the national level market capturization in terms of market segments like equity and capital markets, futures and options, derivatives market, wholesale debt market. These are also available over there. Mutual funds are being traded over there. Apart from that, IPOs are also being traded day in, day out, and so on. Apart from that also, guys, there is one concept relating to day trading, which is also available in National Stock Exchange, which suits very well the short-term investments. But however, having said that, there are investors who think that this type of trading is quite risky. So it is always better to be an investor rather than being a trader, because being a trader involves risky investments, adjustments, time in, day out. So it's always better to be investor rather than being a trader. So guys, these are the benefits which are involved while investing in directly stock exchanges, and that too premier stock exchanges of India, the pride for India. So that is National Stock Exchange and Bombay Stock Exchange. I was able to provide you the kind of clarity regarding these two major stock exchanges in India very well. So now let's move on to our next topic of the day, and that will be what are the functions of stock exchange. Guys, this question has already been asked in CA final examination in May 2011. So the first function of the stock exchange is a continuous and a ready market for securities. So it's like whenever a company thinks about investing in the market, it first has to release and issue its IPO in the market. So a stock exchange has a basic function that it regularly provides a continuous and a ready market for those securities which are entering into the market for the first time. It facilitates evaluation and price discovery of securities. So IPO in a red herring prospectus does allows you to go for the price discovery of a security. Let's suppose tomorrow a company issues its share in the market, but somehow it is not aware of the price it should quote for its prospectus requirement. So certainly during that time, that kind of open IPO usually allows that company for the evaluation and the price discovery as to what the investors are willing to pay and what that company is really requiring to offer them as investment. So it facilitates evaluation and price discovery of securities as well. Apart from that, stock exchanges always encourages capital formation. So whenever a new company starts and provides an issue in the market, majorly NSE and BSE are the two kind of stock exchanges which do allow the encouragement for capital formation. They never BSE is a kind of Sensex market is the one which never says no to any kind of company. So they allows for listing of the securities for each and every company, whether they are rated for B plus or maybe C category. So they don't consider much upon that side, but certainly they allows and encourage each kind of company which are even in the phase of growing startups. Still they allow because certainly they don't want any kind of discouragement for that matter for any kind of new company. So they encourage the kind of capital formation in the market. They provide us safety and security in dealings. Stock exchanges majorly function in such a manner that whatever kind of securities are dealing out in the market, so they allow the investors security and safety for the best kind of possible manner. And certainly, whatever the dealings are being encountered in the market, they allow easy and comfortable access for the same. So they provide the safety and security of those dealings as well. Apart from that, they regulate the company's management. So SEBI always keeps an eye on each and every kind of company that is listing its share on either stock exchange like NSE or BSE. They regulates the kind of company's management wherever there is no such kind of problem which is going in the market relating to any kind of fraud, any kind of error which is materially misstating the financial statements and financial records for any kind of company. So they do keep an eye on them. It's that way they are actually able to regulate the kind of company's management time again and again. Apart from that, they facilitates public borrowing. So any kind of company which is thinking about accepting certain kind of loans so that they can run their business in a very economic way. So there is a certain chance that rather than going for any kind of loans or borrowings, they can directly issue some certain number of equity shares in the form of new IPO or maybe the existing kind of issue with the new number of quantity equity shares in the market. So they allow in such a way that if a company is requiring some certain funds in the market in order to keep its business going and growing, so they facilitate those kind of public borrowings time and again as well. Apart from that, they do provide their in-house clearing house facility. So whenever a company is having any kind of listing of its share, so entire formation for that matter, whether the share certificates, whether it's about demat account services, whether it's about clearing house services, they provide all these kind of security related clearinghouse facilities with time so that this process becomes hassle free, and certainly the investors are comfortable enough to invest in kind of regular equity markets. Having said that, since we all know that, the kind of regularity which is available in security market, still India is being one of those countries which are not having in a comfortable zone to invest in more of the equity market. So certainly these kind of good positives usually help in bringing the investors in the market. If the stock exchange won't perform in such manner or won't provide these kind of quality facilities, certainly enormous amount of investors will get discouraged, and certainly no one will feel like investing in the market. So these kind of prerequisites are usually available with stock exchange markets, and certainly these kind of qualities usually help an investor to attract and encourage while investing in the market. Next comes facilitates healthy speculation. So by healthy speculation means we can say that, okay, have you ever seen anything relating to moneycontrol.com? So it's always provided over there that this is a security which is expected to go high. So buy now. Okay, this is a security which is going to fall down in terms of their equity share price in the market. So it's always better to sell. So buy now, sell now. So this is the kind of healthy speculation which always goes on in the market with terms of securities, and that's where traders like us, traders, brokers, commercial brokers comes into the picture, because they are the persons who allow the market to facilitate something relating to healthy speculations. So a stock exchange usually provides that kind of facility as well. It serves as an economic barometer. So guys, it's always quoted, an economy can be easily judged for any country with the kind of stock index, with the kind of stock indices, with the kind of stock exchange market the country is having in its overall economic affairs. So by looking at the Nifty's position, by looking at the Sensex position, one can easily estimate what's going on with the economy of the country. If the economy is going really well, so certainly Nifty and Sensex will go up. If the economy is poorly handling out the affairs of its regular country-based things, so certainly in such a case, the Nifty and the Sensex will go down, and that is going to reflect the economic and the overall position of a nation like India. So a stock exchange also serves as an economic parameter to know as to where our country heading towards. That was all about the functions relating to the stock exchange. And the last, it usually facilitates the bank lending. So if a company is dealing out very great, certainly the stocks are being listed on the stock exchange. So if tomorrow it is willing to go for any kind of bank loan funding or something or the other, so in such a scenarios, usually the kind of response it is getting from the market on stock exchange, that helps to bank in evaluating whether to provide the loan to that company or not. If the shares are drastically going down, down and down, certainly the bank will be apprehensive and a bit perturbed as to whether to provide them the loans or not. Certainly this stock exchange function of regulating and providing the access to the regular information relating to the securities in the market does helps in facilitating the bank lending for that kind of company as well. So those were the functions of stock exchange, guys. So I guess you got the complete clarity relating to its functions. This question has already been asked in CA final examination May 11, and certainly it is really important, not just for the theoretical or examination point of view, but also while keeping your minds and spirits high intact, so that you can start investing in the securities market time and again. So now let's move to our next topic, and that is stock market index. This question was asked in CA final examination May 10, guys. A stock market index is a representative of the entire stock market. So like for NSE, that is Nifty, and for BSE, it is Sensex. So Sensex and Nifty does provide you an overall estimation of what is going in the market relating to the entire economy and the nation. So a stock market index is a representative of the entire stock market. So movements of the index represents the average returns obtained by the investors in stock market. Let's suppose if a person is directly investing in index rather than going for a particular stock. If supposedly he invested in Nifty, let's suppose 8,000 coins, and today if he wants to assess where he is standing in terms of his financial position relating to those stocks, those index market returns, and if today it's 8,500, we can simply assess that okay, whatever kind of units he has already purchased, let's suppose 1,000, and if market has gone by 500, so he has easily made any kind of loss with profit that is around 5 lakh rupees. So from 8,000 to 8,500 into 1,000 number of units. So we can simply assess the kind of movement of the index usually helps us in deriving the average kind of returns which is obtained by the investor in a stock market. That's how a stock market index usually helps him. Next comes, stocks are valued by discounting future earnings of a company, and therefore the stock indices reflect the expectation about future performance of the companies listed in the stock market or performance of industrial sector. So guys, have you ever thought about why the positions like buy now, sell now is usually depicted on these kind of websites which are available like moneycontrol.com or NYSE.com or something like that? So it is due to that one fact that the companies and the markets are usually striving their best to incorporate these kind of features which allows them to assess and expect the future performance of the company. And that is why the stock indices usually reflect the expectation about the future performance of the companies listed in the stock market or performance in their industrial sector. Next comes, the index goes up, market thinks that the future returns will be higher than what they are present. And if a case, the index goes down, market usually thinks that the future returns will be lower than what they are available in present. So that's as simple as that, guys. If you start investing in like directly index, and if the same is like investing currently trading at X percentage, X amount basically, and if tomorrow that goes X minus 1 or X minus 2, so definitely you'll assess that fact, okay, market returns in present are way better than the ones which will be available in future because the market is going down. And if that return in the future is X plus 2, X plus 5, X plus 10, then in such a case, your perception will be that the market goes up. Usually, the future returns will be higher in future than what they are present. That's how a stock market index usually functions and works for the whole of the economy. So guys, this question was asked in CA Final May 10. I guess you got the complete clarity as to how a stock market index usually works. Now let's move to our next topic, and that is New York Stock Exchange. So guys, in India there are two main major stock exchanges, NASDAQ Stock Exchange and Bombay Stock Exchange. In terms of overall worldview, we'll be considering two of the major stock exchanges, and which are both prevalent in United States of America. One is stock market for New York Stock Exchange, and another one is NASDAQ. So we'll be covering NYSE first. So NYSE is the world's leading and the most technologically advanced stock exchange. Buyers and sellers meet directly in a fair, open and orderly market to realize the best possible price through the interplay of supply and demand. NYSE is popularly known as the Big Board. It has about 1400 members who collectively own the New York Stock Exchange. So guys, in order to become a member of like New York Stock Exchange, one has to purchase the membership. Herein, that is called a seat from another member who wants to sell. Exchange seat owners can buy and sell those securities on the exchange floor without paying any kind of commission. So that's the kind of advantage of being a member, though it involves hefty cost to be paid. Each day on New York Stock Exchange trading floor, an auction takes place. Stock prices are determined according to the laws of supply and demand. Buy and sell orders are for a given stock interact at a single location, ensuring that each order is exposed to a wide range of potential buyers and sellers as possible, no matter how big or small they are. So guys, this is the basic best advantage about NYSE. So New York Stock Exchange independent governance structure separates the exchange regulatory function from its marketplace function and from influencing those members and their member organization. So that's how it works. In order to become a member, I have already told you something about this thing. So one has to purchase a membership called C from another member who wants to sell so as to trade without paying any kind of commissions. Also guys, in order to increase or enhance your knowledge regarding New York Stock Exchange, I would also like to bring a fact to you. The largest number of New York Stock Exchange members is registered as commission brokers. Second in terms in numbers, NYSE members are specialists, so named because each of them acts as an assigned dealer for some small set of securities. Specialists are also called as market makers over there. Third, in numbers of exchange members, those people are called floor bankers, brokers. Finally, a small number of New York Stock Exchange members are called as floor traders who independently trade their own accounts. So guys, in a nutshell, we can say that New York Stock Exchange works in four basic layers. So one is commission brokers, then next comes into the picture that are specialists, which are also called as market makers. Then comes into the picture floor bankers, which are called as brokers, and next floor traders. That is the last one. So that was all about New York Stock Exchange. Now let's discuss more about NASDAQ. So NASDAQ was developed by National Association of Securities Dealer, that is NASD, just to improve the transparency of what was then known as the over-the-counter market for unlisted stocks. NASDAQ began trading in the year 1971, and by 1995 it surpassed the New York Stock Exchange in the reported trading volume. That was the great highs which have been touched by NASDAQ over New York Stock Exchange. NASDAQ trades most stocks and reports the highest share volume of any US stock market. So guys, the NASDAQ market is a computer network of securities dealers that disseminates timely security prices, which quotes up to almost 3 lakh 50,000 screens globally. NASDAQ dealers post bid and ask prices at which they accept sell or buy orders respectively. So if we have to examine what's the difference between key differences between New York Stock Exchange and NASDAQ. So we can simply say that NASDAQ is a computer network and has no physical location where trading takes place. However, in case of New York Stock Exchange, that same is not available. So NASDAQ has a multiple market maker system rather than going for a specialist system which is available in New York Stock Exchange. So NASDAQ network usually operates with 3 levels of information access, guys. Level 1 terminals are designed to provide registered representatives with timely, accurate, and source of price quotations for their clients. Bid and ask prices are available on the level 1 terminals, which are called as median codes from all the registered market, the particular kind of security. Level 2 terminals connect the market makers with brokers and other dealers, which allow subscribers to view price quotes from all over across the NASDAQ market makers. That's how it works. And the level 3 terminals are for the use of market makers only. These terminals allow NASDAQ dealers to enter or change their price quote information anytime they want. So that's how NASDAQ basically works. So guys, I guess you got the complete clarity relating to New York Stock Exchange as well as how NASDAQ works in the US markets. Now let's discuss the last topic for this presentation, and that is reasons why Indian companies flock to US for listing in NASDAQ or New York Stock Exchange. So the best thing, the most important reason behind such seeking of a listing on American stock exchanges is the depth and liquidity that the market offers. Secondly, it provides access to world markets and thereby to international investors. So usually, relatively, it becomes easier to raise capital in such a manner. There is an access to international financing and currency. One can acquire companies abroad. Next comes NASDAQ and New York Stock Exchange listing also brings the advantages and discipline of foreign listing. Guys, that is also important. So NASDAQ and New York Stock Exchange thus allows the Indian companies to flock towards them. However, the advantage of discipline of foreign listing usually has to be regulated by the Indian companies over there. And the last, at the same time, it's a prestige issue to be listed at a New York Stock Exchange or NASDAQ Stock Exchange for the Indian blue chip companies. So we can simply, in a nutshell, we can say, so the reasons would be the depth and the liquidity international market offers, plus the kind of access the international market offers to investors, plus there is an access to international financing and currency, also the kind of discipline that allows the Indian companies to flock to US, and also the last, that is the prestige kind of issue. Okay, it's the kind of respect which one gets while investing and getting the acclaim in the international markets. So that was how the reasons why Indian companies flock to US for listing in the NASDAQ or New York Stock Exchange market. So guys, I hope you got the entire clarity regarding New York Stock Exchange, Bombay Stock Exchange, National Stock Exchange, NASDAQ, and why these companies flock to them over there. I'll be concluding my video with a dose of motivation, and that will be, don't let yesterday's take you up too much of today. So whatever has happened in the past, it's already happened, guys. You need to let it go off. Okay, don't try to hamper your today, your present, just for the sake of your past. The past has already been done. The damage has already been done. And now what we are doing is we are also damaging our present just for the sake of our past. So that doesn't make any kind of sense. So one has to let go of his yesterday in order to take up his present in a better way. So don't let yesterday take up too much of your time today. This quote was presented by Will Rogers. We dedicate this to him. Thank you on behalf of the Edupedia world. Stay connected, guys. Keep interacting via your comments, questions in the query boxes, which are available on YouTube. We love to understand your needs way better that way. Love you guys. Take care. Enjoy your day. Bye.